Thank you very much at the very outset for having invited me to address this very important FinTech conference. Representing India at this conference, it's a great opportunity for me to place before this august audience the developments in relation to the Indian economy which have been taking place in India, with particular reference to the digitization of the Indian economy, which has gathered pace, particularly in the last 2 years. India broadly has remained a very stable economy, even when the world had slowed down. The last 3 years, we've consistently had a growth rate of over 7%. It ranges between 7 to 8%. Our macroeconomic parameters are broadly under control. Our fiscal deficits gradually declining. Current account deficits always maintained and gradually coming down. India traditionally had been used to a very high level of inflation, but now we have statutory targets which have kept them below the 4% statutory mandated limit. And we have a stable currency. One of the most significant aspects of Indian economy has been that a country governed by federal polity, there is a considerable amount of competition between the region, the states, in terms of growth, in terms of progress, and in terms of attracting investment. Of course, this has given India an opportunity to undertake a large number of structural reforms. And structural reforms, obviously, in the short term, do present certain challenges. But I have not the least doubt in my mind that in the medium and the long term, the structural changes itself augur well for the Indian economy. In the last 3 to 4 years, and it's important to give this background, particularly in the context of the changed scenario in relation to digitization, as to how the expansion of the economy itself has taken place. India has liberalized its policy considerably with regard to the foreign direct investment, and we have been the recipients of perhaps the largest FDI anywhere in the world. In terms of internal governance reforms, we've tried to almost eliminate all governmental discretions and let market mechanism decide economic decisions itself. We were conscious of the fact that there had been conventionally adverse comments about India not being a very easy place to do business in, and therefore a considerable effort has gone in the last few years, and we've moved up significantly the World Bank rankings across the last 3 years in the ease of doing business itself. A lot of investment has been going into public infrastructure, rural infrastructure, as a result of which the expansion of the economy itself has been taking place. We have a very robust insolvency and bankruptcy code now in action. Direct tax reforms have been taking place, which are trying to rationalize the direct tax administration in the country, bring down the rates, improve the interface between the department and the assessee itself. And that brings me to three very important structural changes which have come about, which impact upon the very fact of digitization of the Indian economy itself. The first of all had been the creation of what we call the Aadhaar platform. The background of the Aadhaar platform has been that every Indian today has a unique identity number. This unique identity number has his entire biometric details. Today, as far as adults are concerned, more than 99% of the population is covered by it. In the case of young children, the percentage is slightly less. Initially, this was conceived to be an identity, and then it has evolved with the support of a parliamentary legislation into a process by which various government benefits, or subsidies as we call them, now can be transferred to the weaker sections of the society by making sure that only the deserving get it. Earlier, the state support used to go across, irrespective of the social and the economic standing of the beneficiary itself. But in order to target these to specific cases, that people who deserved them, we've effectively used this Aadhaar platform, which is probably one of the only ones in the world, which has been effectively implemented in India. The impact of this is, coupled with the fact that we had one of the largest, or perhaps the largest, financial inclusion program in the year 2014. In this financial inclusion program, when we started off, only 58% of Indians and Indian families were connected to a bank account. We made sure that an expansion of this financial inclusion took place. And therefore, every Indian got connected to a bank account. Today, except for some remote cases in left-wing extremist affected areas or in geographically unreachable areas, the banking system managed to reach every Indian. They reached them through their branches, they reached them through their business correspondents and individuals. And therefore, every Indian had a bank account which is called the Janadhan account. We started off with people who were economically deprived. Almost 78% of these accounts started off as a zero balance account. And then when we started merging the benefits of the Aadhaar platform with these accounts, that all benefits which were to be given to the weaker section, now instead of being given through a price mechanism of commodities, let us say illustration, that if cooking gas is to be given at a subsidized price, it was available at a subsidized price to almost everyone, rich or poor. And now through this platform, only the weaker sections were targeted. And therefore, the monies would directly flow into their bank accounts, and the price mechanism itself would be common. The result of this was that pensions, scholarships, assistance to weaker sections, various forms of state support systems, both by the central government and the regional state governments, and dozens of schemes under which this assistance was to be provided would now, by a direct benefit, go by a cash transfer into these bank accounts, because every Indian itself had a bank account. And we were, through the Aadhaar platform, able to identify as to whom the account itself belonged to. This is still work in progress. And today we find that a lot of economic activity relatable to conferment of and dissipation of social benefits through this platform is actually making a significant difference, resulting in a large amount of savings as far as the state is concerned, and therefore state support now is being specifically targeted to the weaker sections and excluding those who were not really entitled to it. The second important structural change which came as a part of this entire drive was an important move which was announced by the Indian Prime Minister on the 8th of November 2016, when he decided to demonetize high-value currency in India. The background of this was that India was essentially a cash-dominated economy where bulk of the transactions would take place only in cash. India's currency to GDP ratio was about 12.2% of India's GDP was the equivalent of the paper currency. Of this paper currency, almost 86% of the currency was high denominational currency. Now, an economy which was dominated by a high denominational cash currency obviously had all the adverse impacts that a cash currency could have on the economy. And therefore, the Indian normal as it existed was that large transactions would still take place in cash. Many businesses, more so in the informal sector, would always maintain two sets of account books. Tax evasion was the normal principle, both in terms of direct and indirect taxation. And in fact, what the state would collect was only a small percentage of the taxation that the state was entitled to collect. And obviously, all the adverse consequences of a high cash-dominated currency were visible in the society. Now, this was a shock therapy as far as the economy was concerned. This took a lot of time to prepare, to take this decision. The decision had to be kept a closely guarded secret. The alternative currency printing had already begun, so that the remonetization could simultaneously take place. And the result of this action has now been clearly felt in several areas. In the very first year, as we finished the first year on the 8th of November 2017, we find that the high denominational currency in India in the very first year has squeezed by about 30%. It's 30% less than what it used to be a year ago. The number of taxpayers in the individual segment has significantly increased. In fact, a lot of people who were making deposits into the banks of the cash, through a process of data mining, were analyzed. And we have so far discovered that about 1.8 million of them had made deposits which were disproportionate to their declared incomes. And obviously, all these people now have been nudged into filing tax returns and making more declarations as far as their taxation is concerned. But the third and the most important aspect has been that this brought about the issue of digitization of the economy to the center stage of the economy. And for the first time, a new normal was set up that must you have transactions where you deal predominantly only in cash. And therefore, the need for digitization of the economy itself has been thrown up as a result of that debate. The consequence of this has been that in the last 1 year, the number of digital transactions has almost multiplied by 100%. New kinds of technology instruments, applications have been emerging. The banks, the government, other financial FinTech companies have been innovating and creating new payment gateways. And the mode by which India now spends its money substantially has begun to alter. This is just the beginning. And therefore, in the very first year, when you find a lot more transactions going through the banking system, the tax base itself increasing, the first round of squeeze of cash currency taking place as a result of this very important measure which has taken place, and then various instruments and various applications coming up, and an ecosystem being created by the state for the startups to come up and emerge and create new instruments by which these kind of payment gateways, etc., can be created, I think has created a new environment in India. As I look down the tunnel and I see what will be the position 5 years and 10 years from today, compared to what existed exactly a year ago, where we were continuing to be a cash-dominated economy, I think this whole process of an initial shock that has come about in the economy, bringing about the issue of digitization to the center stage, I think is going to be pushing the Indian economy more and more towards the digitization, and that's going to be the future as far as the Indian economy is concerned. The third extremely important step which has taken place, which has aided this process, almost back to back with the demonetization and the entire thrust towards digitization, has been the introduction of the goods and services tax in India. India's indirect tax system was highly obsolete. Every state had its own different taxation. The central government had its own different taxations. And therefore, in all, any goods or services in India could be theoretically subjected to 17 different taxes and 23 different cesses. That's the system that existed. The result of this was that there was no free flow of goods or services across the country which could take place, because every state was a unit in itself. This also had led to large-scale evasion as far as the tax system is concerned, because the tax system itself was an inefficient system. We had been attempting for the last few years, and finally on the 1st of July this year, we succeeded in creating and legislating what is called the Goods and Services Tax for India. The Goods and Services Tax is one single tax applicable for the whole country. All the indirect taxes, whether on goods or services, have been merged into one tax, and the process of transition is today on. The new tax came into existence on the 1st of July itself, and the consequence of the new taxation system has been that from a very inception, That is the purchase or the creation of the raw material till the final sale of the product takes place, till the movement of the good across the country. Every transaction is now recorded online. And therefore, every stage through this return can be traced out. Being a more efficient system, it probably so far ensures that evasion has become more difficult. And as days and months are going to pass by, more checks and balances are going to be introduced as far as this taxation system is concerned. And this itself is going to render extremely difficult the generation of cash as far as the economy is concerned. And therefore, a lot of the business transactions of the economy in relation to both goods and services are both going to be online and therefore going to be traced online through the digital mode itself. The process of filing returns also is that every business has to file every month its returns online, and therefore the entire business transaction itself could be digitally verified. The supplier and the buyer's returns itself could be matched to see that the transactions really tally with each other. And in case there is a variation, there is an ample scope as far as detection is concerned. This now has enabled a lot of the economy to really get formalized. We are now seeing the integration of that informal economy with the formal economy itself. As I said, in the short run, this does create challenges. This can create some short-term challenges in terms of growth rate, etc. But I have not the least doubt in my mind that in the medium and the long term, this is bound to produce long-term returns as far as the Indian economy is concerned. So where does the big picture stand as far as the Indian economy today is concerned? A fairly stable economy growing at a reasonable rate of growth, integration of the informal with the formal taking place, structural changes taking place, tax base itself expanding, a lot of transactions which used to take place entirely through the cash economy, today now getting increasingly digitalized and going through the banking system, being able to be traced out through the banking system itself and through the digital mode. And the impact of these three important measures, the Aadhaar system, the GST, and of course the impact of the demonetization itself, is that a bulk of these transactions now going online. I think if we look down over the next few years, greater digitization and greater formalization, that's the area, and therefore encouraging all kinds of startups and creating an ecosystem, both in terms of tax incentives, capital providing for these startups, India becomes an extremely attractive place to do business in. That's all I had to say in my opening comments. Thank you very much.